Have you ever heard of the term asset allocation and wondered what it meant for your overall retirement success? Or perhaps, like many people, you thought it was just a fancy term that advisors may throw around to make themselves seem smarter. But the truth of the matter is that asset allocation is very important to how your retirement is going to be able to maintain through various markets. And so we're going to talk about that in today's video. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason that we create these educational videos is to make the difficult and stressful process of retirement income planning simple.
Yes, and we do this by incorporating a team of expert advisors that includes certified financial planners, certified financial analysts, estate attorneys, insurance advisors, and other needed professionals to help our clients get a fully written retirement plan that's going to let them know when, where, and how to take money from their retirement savings.
For the best retirement income planning advice, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So anytime you're looking at your overall retirement savings, it is going to be critical that you understand the importance of asset allocation between different investment choices. And so we're going to cover that in today's video, because we know that if you do not properly allocate your portfolio in bad times, things can really get very uneasy for you. So we're going to cover three things in this video today, Andrea. We're going to cover what is asset allocation. We're going to also talk about the three major asset classes, and we're going to talk about how important it is to rebalance your portfolio. But before we do that, there are two rules of retirement income that we always want to share with you. And what are those two rules, Andrea?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
So let's talk about asset allocation and how important it could be for your retirement success. So another topic that I really want to talk with you about when it comes to retirement living is understanding asset allocation. Asset allocation in retirement is critical for your success. So we're going to talk about that in this video. So the first thing is good to understand is to know what asset allocation is, because it can be confusing. But by definition, asset allocation is an investment strategy that aims to balance risk and reward by allocation of a portfolio's assets according to an individual's goals, risk tolerance, and investment time horizon. So that's by definition. But there are three main asset allocation classes that you're going to want to understand, because these are the most common ones. One is going to be equities, which is typically stocks and mutual funds. Two is going to be fixed income. And in this category, and in this bucket, you're going to be looking at bonds and possibly annuities as well. And then the last asset class is going to be cash, or what we call cash equivalents, which can be money markets, short-term CDs. Of course, you have savings and checking accounts. It's all considered cash. So when it comes to allocating your assets in retirement, it is very important that you understand these three asset classes when it comes to stocks, bonds, and cash. In retirement, asset allocation within various investment choices is a strategy that you must consider. With that being said, asset allocation is an approach to help manage risk. It does not guarantee against investment loss. That's very important that we understand this. So as you can see, from 1999 to 2018, stocks were the best performing asset classes out of cash and bonds. But of course, contrary to the popular belief, stocks did not outperform bonds by as much as most people might think, only marginally. But nevertheless, stocks were the best performing class from that particular period of time. And usually in any historical data, you're going to see that continuing to be the actual case. But you have to understand that stock prices were volatile over that period of time and may not appeal to an investor who may have a lower risk tolerance, which is why we keep harkening on the ideal of getting your risk evaluated. In the same degree, if you're looking at going into a more conservative strategy by allocating everything into cash over that period of time, obviously you're going to have less volatility when you're in cash. But here's another major issue. you may have a loss of purchasing power due to inflation. So you just can't completely rely on one strategy over the other. It is important that you understand your risk tolerance and get a risk assessment, which you can actually do by clicking on the link at the end of this video and take our risk assessment to find out what percent of your dollars should be in any of these categories at any given time.
So Carson, basically there's 3 areas of asset allocation. There's equities, fixed income, and cash.
Absolutely. So these are the 3 main areas as you, as a consumer and an investor, should understand. Equities, which is going to be, as I mentioned, stocks and mutual funds. Fixed income is going to incorporate bonds and even can incorporate annuities as well. And then, of course, cash is what we all know about, right? It's what we keep in our banks and our savings accounts or checking accounts. So let's go ahead and talk about now rebalancing your portfolio and how that may affect your overall retirement as well. So as we move on, we want to talk about another aspect of asset allocation, which a lot of advisors overlook for their clients, and that's rebalancing your portfolio. In 1998, in this example here, you can see a portfolio that's allocated with 50% stocks, 20% cash, and 30% in bonds. But over that period of time, what would that portfolio look like in 2018? Well, it's going to actually look different, of course, because the market changes, obviously. So now this portfolio has 57% stocks, 33% bonds, and 11% in cash. So this makes this portfolio now more aggressive. So it's going to be important that you rebalance this portfolio more to your risk tolerance at that time. And this is not a one-time event. It is an ongoing process. So I really hope that this short educational video was beneficial to you. I hope that you understand a little bit more now about asset allocation. If you have any questions or comments, please leave them in the comment section below, and do not forget to subscribe to our channel.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.